All right, morning. Today is March 16th, 2022. On this journey of our trading life, I think I can start to assess how we are doing. Um, and I think so far we've been doing okay. Um, the general feel is that um, whilst I am making money, I'm still losing money. Um, and not losing because um, taking sort of not knowing what trades or what to take actually, but it's more so taking bad trades and not assessing probabilities better. But I'm getting better at assessing and knowing how to control myself. I think that's actually the biggest challenge for me is starting the day off really well and then sort of losing it and then not trading properly. Um, I'm finding that the issue with trading actually has more to do with self control and discipline, more so than it does to do with your ability to find trades. And I think the problem is there's too much emphasis on the ability to find good trades and less on just accepting that your trade is working out or not. So I'll give you an example. Um, I initially took, I started to take a trade here. I bought just as this candle formed up here. You can see it's pulling back, and my stop was just about here. And I had to really hold myself and ask the question: am I prepared for the size I was entering? Am I prepared to risk that amount of money, whilst the probability is high? Well, my stop was just not in the right place. To increase my probabilities, I would need to bring my stop say around here. But then I would then be risking so much more for what I wanted. It was just not worth it. The other thing is I would be thinking too much about it because it would be a swing, as I was just gonna just turn off Ninja Trader and just go. But there was also the possibility that price could, anything can happen in trading. So I got out of the trade and just basically just paid the fees. As you can see, didn't make any money on the trade. Um, but it really made me think about probabilities a lot. Um, Entering a trade like that was really all about probability. Um, and that is really what is the issue I find with my trades. I took some trades today, I took some trades over here, didn't trade well. Traded this part okay, then lost some money here, and then made some really good money there. Um, and as you look at it, there's a few things that I need to accept in looking at this. Um, and then looking at this as well is also important. So let's look at one thing. First thing first. This area where I took some trades, um, and this was on the ES. I went short and long here, and I was very confused. A few things I had not considered was, first of all, confusion usually means that you're either in a trading range or you're entering too early. But even if you are in a trading range, you need to find where the buyers are and where the sellers are. Usually in a trading range, we have buyers at some support and sellers at another. I wasn't looking at this chart properly. I was looking at it on a different screen, and I realized that the fact that I was looking at it on Thinkorswim, which had a black background, I didn't really see the importance of the moving average at the time. If anything, I was looking at this chart, and this is where we opened. So I saw all this and saw this drop at the open, and then the retracement back here, and then another drop. So I wasn't trading this according to what was really happening, because if you think about it, we've been above the moving average, so we're bullish, and we're still finding support at the moving average. So chances are we're probably in a bull trend. I mean, we didn't take this high out, or at least on the S. On the NQ, we did. Um, but yeah, I was not assessing probabilities, i.e., all right, if I'm going short, where? Here? If I'm going short here, where am I targeting? The moving average? Um, what is the probability? What's my risk? This is my risk. And I think I oversized as well. So that affected everything because my risk was too high. I say this because this is all in conjunction to the trader's equation where your risk, reward, and probability need to be considered. Whenever I take a trade, I need to look at the trader's equation. I actually posted this in my Discord earlier today where I said that you need to look at this and make sure that your risk of profit times your probability, sorry, your risk of reward times your probability of profit is greater than your risk of probability of loss times your risk. Your probability of risk, probability of loss is greater than times your risk. Essentially, this. Um, and a lot of the times I don't have a positive trader's equation, but I enter the trade, and as a result, I end up losing money. And I think that's the key thing: understanding the the importance of the trader's equation. I never really understood it, but now it makes sense. Anyway, so this that was the reason why when I got into this, when I took a trade here short or long, I was very hesitant because I felt I was just entering out of FOMO. I saw this bar form, and then I entered on this bar, but then I hadn't considered what my risk was. Was it below the moving average? Was it below here? Um, when price wicked back, I was negative. The risk was too large for me, and I stopped out. Did not consider the fact that we were coming back up. I mean, I knew we could come back up and erase this, and then this started to come down. I thought, okay, I could take this down, and then I only got so far, and I thought, oh shoot, I've not, I'm losing money because I'm taking stupid trades only out of FOMO, and so I stopped there and didn't even trade it. Did not trade this part, missed all this part. I think I had to. I saw we were very strong here, and we're going into this area here now. Oh, where was it? This is no. We were So we were here. So as in this part consolidation is this. So what I just had not considered to help my resolve over here because this part is about here, at least over here, which is if we look at it, that's this part over here. Okay, so I'm just gonna pull this out. So this is where the market opened. Um, if you think about it, in terms of assessing the probabilities of taking a trade over here, you really need to see what's going on over here, especially when you've seen this. This is a wedge bottom, and the first target for a wedge bottom is where the wedge started, which is exactly where this is happening right now. It's a good thing I got out of it. But the first target is this because we're now in this trading range. And generally what happens, as you can see, we have a wedge top, and the first target is where the green line is, right, which is close to where this is right now. And you can see we went here spiked, and normally this would be double or something like we go for a measure move. So this move should equal this move. So it actually looks interesting because now that we've almost finished this breakout here, I don't know if this is the first pullback because this is the first pullback, this is the second pullback, and then this is the reversal. So I I have to ask the question, i.e., are we, whilst we're now entering this area, um, Oh, sorry. When before, if say the market opened, where was it? Around here, right? We still have, yeah, this is where we still have this to go. I mean, anything can happen. I mean, there's this area of supply, but it's a wedge bottom, could still go higher. Um, the probability of us going higher is pretty high. You could probably say 60% because it is a wedge bottom and it's reached exhaustion. We could still go higher, but we hadn't taken out this swing high, so therefore, which is this. So therefore, the probability itself is skewed. I guess this is why we have this retracement here. But we still had to go there, and there was a high probability we could go higher. Which is of 60%. Especially if we had this breakout, and maybe that's what I should have waited for. Waited for the trading range, and then also there was a rumor that we had FOMC, so I thought maybe we might have a trading range day, which is actually, I mean, the meeting actually happened over 2 days, and today's the second day. So um, I really ought to have considered that. And then seeing this breakout should have given me the conviction that we're going higher. Could have taken this, risked the bottom, and then gone for at least a trade all the way up here. Or at least 1 to 1, which could have been, yeah, all the way up here, based on this measured move, which is why I've marked it. This is another measured move target all the way up here. Taking that, this breakout all the way there, risk there, and, heading for that would have been a really, really good trade. In fact, how many points is that? I'm just going to leave that there. 29 points, which would have been a really nice trade had I held up, and I'm sure probably I've gotten out around, yeah, around about there. As you can see, a lot of traders got out there instead. But anyway, that was essentially what I should have done. Just waited for higher probability, a high probability setup, and that being that we have a double bottom, which is why I've marked this over here, a double bottom at the moving average. And in fact, I should mark this in my notes. I do have that here, but I think I should mark probabilities as well in here. So we have a double bottom at the moving average, and therefore a nice buying this candle long, because you can see we're forming a triangle here. 3 pushes up, 1, 2, and 3, and breaking out that triangle, putting your stop over here should yield a really good profit. In fact, what I'm gonna do is I should put a measured move based on that in here. See what that is. Breakout of that would have been there. But yeah, so taking that trade was a pretty good trade, with a very good probability. We're in a bull trend, and what helps our probability, our case even better, is the fact that we're above the moving average. We're breaking out with very strong bars. The moment you see that, this is a bull surprise. We should expect a second leg up, which should help our case to even stay longer in this trade. So that is how I should have played that. Of course, we had a sell-off over here, which was a test of the previous day high, and the previous day being this massive sell-off here, which is essentially what happened here. And then we now had a nice rebound. So this sell-off, I remember looking at this chart saying, okay, we've sold off a bit, we have a nice wedge top here, but are we going to go down? Because we have this wedge bottom. Probability of us now going all the way down just seemed a lot less than 40%. I would say maybe 30% at this point. I wouldn't want to take this trade down. I mean, as you can see, we've tested the moving average, and therefore we have the moving average in the way. Traders buying off the moving average, going even higher, and then breaking that high. The moment you see that, now you have a double top, and then now another retracement, but look at the moving average. And then we started going in a trading range. We now held the base of the trading range, because this is the bottom of the trading range, which is literally the test of this range over here. So you have one range here, and then another range here, and then this third range. This is the breakout. Um, and then you can see what's happening here at this wedge bottom. Now, what I did at this point, I'm going to maximize my screen. And what I did at this point is, this is where the trading now got really interesting. I didn't trade this. It has double top, and in fact, maybe what I should do is put my entry and exits just to remember what I did. So I remember taking. Did I go long? Why did I say I go long here? Because I remember shorting this. Why would I go long here? Oh, weirdly. I remember taking some shorts here. Yeah, I can see I took some shorts here. Um, and made some good money on this leg. And I think it was based on this double top. Um, Shorted it down here, made some money down to the moving average. And it was mainly scalping. I've noticed that's what I do now. I just literally scalp. This I held a bit longer. I took a long here and held all the way up here. But here again, this is where I made some really good money here, both on NQ and ES. But then lost money here. And the reason why was I had this wedge bottom here, took this long here, but the follow through wasn't great. So I decided to short it. And the problem with this short was where my stop had to be. Because you think about it, where your stop really needs to be all the way up here somewhere. And this was not, based on the amount of money that I made here, it wasn't worth taking this trade short. Whilst again, this is a wedge bottom going back up. But I noticed that the follow through was so poor, because we're getting the first, above this bar, getting this, not really crossing. I assumed, we're probably not going to cross the moving average today, because sometimes in the past we've done that where we're struggling to cross moving average. I mean, we eventually did, but it was a very weak attempt, so therefore we were probably going lower. And therefore I entered this short too early, because as you can see, this came here. Now, what I also noticed was whilst we were coming down, we were holding this moving average. Every time we go up, this would stop us, would come down, this would stop us, would go up, this would stop us, so this was support, this was resistance, and they were both converging. So I assumed that we would not break it, but eventually we did, and I stopped myself out because I realized the probability had reduced, and so I had to increase my risk versus reward by reducing my probability, so bringing my stop lower, closer to my entry. And in the end, I ended up losing a lot more because price was already out there. So this was not a well-structured trade. As a result, I ended up losing more money than I expected. And then now notice we now had price coming down, because initially I think I went long and then ended up stopping myself out. And on NQ I went short here. I remember, because I was like, where is it? On NQ I went short. Ended up looking at I was trying to assess where it is that the trapped bulls would want to exit, because we had this inside bar here. So I said, okay, all the bulls who I didn't notice the inside bar, by the way, but all the bulls who are long need to cover above a bull bar. And I can't remember what I did. Well, anyway, I came up with some assessment. I noticed that they had to cover over here or something. I can't remember. I have to go and look at the chart. So my exit was supposed to be here. I stopped myself as we were waking up, and was very upset when price came down here. At this point, I now noticed we had a bigger wedge bottom, and I thought, oh my goodness, we have a nice bear channel. This is 1, 2, this is 3. I thought this was 1, 2, and 3, but as you can see, price had not come back to the top of the channel, and this was the channel. So I marked this to remind myself of what had happened. So once we had this bear channel, I went long here, and I had a lot of indecision and ended up losing a lot of money, especially on the NQ. So what had happened was, I noticed that we we were waking up and down, and I say waking up and down in the sense that we could not figure out. Yeah, you can see I took so many trades here. So we were going up and down, um, and I assumed, okay, you know what, I'm going long, and then I exited below. I did not rely on my stop. Went long again, exited again, and lost a lot of money. And a lot of that has to do with one, entering too early without a signal candle. So therefore my probabilities were lower. The signal candle increases your probability. Um, I did not wait for the signal candle to form. And I think I looked at the 2 minute chart and I looked at that signal candle. But because I was not convinced with my trade, and I didn't want a situation where the trade, my risk was going to be so much higher. In this case, my risk would have been 32 points. And I wasn't ready to risk 32 points. I wanted to risk a bit less by coming in here. And probably what I could have done was put a limit order here and caught this pullback. But you never know if this pullback's coming. I should have waited for this candle and risked the 32 points, entered small, and then built up a position. Anyway, I got in, was now convinced we're probably going to get up here, so I put my exit up here, but then exited just all the way up here. And yeah, and then started to scalp this because I noticed that we were breaking out. Got all the way up here and just did not want to trade this because it was a small pullback bull and I was having FOMO, wasn't sure I could handle these wicks, and I let it go. All right, let's just turn this off. Yeah, so the essence of this recap, which has gotten really long now, is just really assessing probabilities. As I said, in terms of my trading recently, what I have been doing is understanding, I'm trying to figure out even better how to take the trades, why I'm taking these trades, what I'm seeing, what could I have improved on yesterday, what could I have changed, or what can I change. And I think a lot of that has to do with the bigger picture, i.e., what is going on here, what is going on here, what I envisage based on the idea of what's happening here. Um, Ideally, I would love to have taken this trade up, put a nice target, and as the trade is working out, just been even more convinced as this is going higher and higher. My conviction is that we're going much higher, and therefore I'm more inclined to stay in the trade. And then seeing this happen, big bars towards the end, should give me the conviction that we're probably at the end. Also, it's a wedge top, 1, 2, 3. More reason why I need to be exiting the trade. Seeing this as well, okay, fine, maybe it's a good exit. Double bottom here, good opportunity to enter again. Just using those things to help you stay in trades longer, but also help you trade the bigger picture as well. Expecting this to happen, which is the midday reversal. In fact, I should put that in my notes that this is the midday reversal. And then now trading this part. This part was a bit tricky because, like I said, I took it long here, expecting price to break out of this, which we did, but then wasn't sure if we would break out of that. But again, trading this is the essential. This is why it's more important. And then seeing this should not be a surprise. A nice breakout as well. Yeah. So in terms of my assessments, I want to improve on that. Today, I don't know what we may have. We may have a trading range at first, and it is FOMC, so chances are we could get a big bar up, or we could get another big bar down. We could come back, probably go sideways for a bit. It was so extended from the moving average, so I envisage we're going to get this sort of price action again to go sideways before we go down. We go up. It's so funny how the market times itself with these events. So we might break out or break down depending on the results of the FOMC. All right, so that is my recap. It was a bit longer today than normal, but I had to get all that out, um, so that I could. It's more of a think cap, should I say? Really assess it, looking at my thoughts on my trades and how I should have traded and how I'm trading. It's the same thing that happened over here. This was a day where I made money down here, and then I started to screw it up over here, and then lost a lot of money in my account, which is weird because when you think about it, this is a spike pullback channel. Um, you see what the market's doing. It always does this all the time. You always have a breakout, and then you have a channel, and then you have a trading range. At the time, I thought this was the spike, this was the pullback, this is the channel, and this was probably the reversal. But as you can see, it happened over here, because you have another spike again. This day was actually a lot better. You have a breakout here again, so you have the spike here, the pullback, the channel 1, 2, 3, then went sideways, then we had the breakout again. Um, like I said, this was a better day to trade, and I got this trade better. Like, I traded this well, which is, wedges are easier to trade. These parts, I think what I need to learn, actually this is it. I need to understand how to trade this, how to trade this, how to trade these patterns, in trends, which is interesting because when we do trading range days like this, I'm actually a lot better. Um, but that's because I know we're going to keep reversing all day. On a day like this, I'm not as good as a trader because here we go, wedge top, and then I didn't expect a nice small pullback bear trend to form. But once it's formed, you know you're going to get this. So you should just stay short. Or even if you're not short, you can trade these pauses in the trend or two-legged pulls. Um, yeah, it's now and I'm happy we can see these things now, but it's just knowing how to trade. What is the market doing? Here we're in a bull channel, then we're in a trading range, then we now have a breakout. Understanding the patterns that are happening and what may happen as a result of that. And actually, this looks like a triangle here to here. Um, yeah, and then knowing how to trade them. So that's the next thing. Understanding these patterns as they're forming in the day and knowing how to trade the bigger picture. I think is vital. All right.